Nvidia just made a massive announcement worth over $500 billion. But it's not about Nvidia spending 500 billion or creating a fund worth that much or investing that in another company. What Nvidia is trying to do is way more important than all of that. Nvidia is working with major banks like Blackstone, BlackRock, Goldman Sachs to mobilize over $500 billion to create assets to invest money in AI infrastructure. Jensen Huang, the CEO of NVIDIA, is trying to make AI compute an investable asset class. Now, all of that sounds super complicated, but the idea is actually really simple. NVIDIA wants Wall Street to treat AI factories kind of similar to a power plant. You get money, you build infrastructure, you produce electricity, and people pay you for the electricity. But the difference here is instead of producing electricity, these factories are producing AI compute. So if NVIDIA can get this to work, they're going to be removing one of the biggest bottlenecks that we are starting to see, and that is money. So let's clear up this $500 billion headline. NVIDIA has went to 6 investment firms slash banks to get all of this financing mobilized. They went to Apollo, Blackstone, BlackRock, Brookfield, Goldman Sachs, and KKR to get all of this started. And the goal of these banks is to get $500 billion of third party capital. And this is really important because NVIDIA wants other companies to pay for the AI infrastructure instead of NVIDIA themselves. This has been one of the biggest headlines we've had this year of we continue to see NVIDIA investing in companies, those companies buying NVIDIA's chips, and it makes people wonder, is there actually demand or is NVIDIA creating it in a fake way? This allows all of those discussions to kind of be put to the side a little bit. So the best way to think about this is NVIDIA isn't trying to go and sell $500 billion of chips here. They are trying to change the way that their customers are able to invest and finance their own build out, which then leads to NVIDIA selling more of its chips. I've talked a lot about all of the different AI bottlenecks on my channel. And so be sure to check out those videos if you're interested in hearing more specifics. But like I talked about earlier, one of the new bottlenecks that's coming up with all of these smaller companies is where does the money come from for them to get started in the first place? Building out these new data centers is extremely expensive. There's all of the different layers you need. You don't just need the chips, you need memory, you need cooling, you need connection, you need somewhere to put the data center. All of this adds up, not to mention all of the construction costs and the timing. So it doesn't matter if you have customers that are wanting the AI compute that that your company can produce. It's about getting everything started in the first place. And this is what's supposed to help with that process. So if I'm a small company and I need $5 billion worth of NVIDIA's chips and I can't afford that, that becomes an issue for NVIDIA because NVIDIA does obviously want to sell chips to every customer that is interested in it. But if I'm a small company and I have access to a fund that would then be able to loan me money that I can then finance the chips, this solves a massive problem for that smaller company, and that is financing. So before we go any further in, if you're enjoying the video so far, please like and subscribe to the channel. My channel is focused on long-term investing, and I do breakdowns like this, trying to take really complex ideas and break them down in a way that you can understand and ultimately benefit as an investor. So with that said, let's get right back to it. So what does AI as an asset mean? So let's go back to the power plant example. I raise money to create infrastructure. I build the infrastructure to create the power plant. The power plant then produces energy, and then I have customers willing to pay me for the energy. This makes it so my power plant is an investable asset because it's returning money on the investment that I originally made in it. Since it returns cash flow, this means I can get financing against it to build it out. So let's then take that example and apply it to what an AI factory would look like. So if I build my AI factory, the AI factory starts generating AI compute. We have companies that want to use AI compute. I now have an investable asset because I'm getting paid for the production of what the factory is producing. So this starts rethinking the entire AI model that AI compute is equivalent to revenue. So this is the overall equation that Jensen Huang is going for. We want financing to create capital. That capital then uses in the construction of an AI factory. The AI factory then produces compute, which then turns into revenue. So this is why Jensen Huang said in AI, compute is revenue. And this is the basis for all of this model being redone and the strategy that NVIDIA is trying to push now. So let's walk through an example really quick of how this would work. So let's assume a customer needs a $5 billion NVIDIA AI factory. They're going to have to find ways to borrow that. And traditionally, they would have to give away part of their equity in order to find some sort of private investor to help fund the project. But now add in institutional investors. They're going to come in and figure out who are your customers, how much money are you expecting to make, how much is the equipment that you need, how much is that equipment going to devalue over time, and ultimately, if the numbers make sense and overall economics make sense, the institutional investors can finance the project, and that small company gets the infrastructure they need to create that AI factory. From there, the AI factory makes the compute, they sell it to customers. Those investors are rewarded, and NVIDIA gets to sell the chips to build out the factory. So, this is huge for NVIDIA shareholders because it's no longer NVIDIA financing and risking themselves on the project. There are third parties that are doing this. So, this is a huge boost if you're an NVIDIA investor. Ultimately, this creates an amazing flywheel effect that NVIDIA is wanting to go for. If there's more money available, that means that there's more infrastructure that can be built, which then leads to more AI compute that is available, which then leads to more applications to use it, which then needs more capital and more AI infrastructure. So you can see how this makes NVIDIA one big happy family because AI continues to scale quicker, their risk is lower, and they continue to build more compute that then leads to more demand. The other winner here is the banks because they are looking for new ways to create money. So if AI turns into a durable way of cash flow, this will make them really excited and want to participate in this because it's just another asset that they can then go sell and make money off of. Now, let's pivot really quick and start talking about some of the risk that comes from this model. And starting off, the metaphor that I've been using is a power plant. And we know a power plant can be built and create power for decades to come. It's an asset that is almost guaranteed to continue with maintenance and everything else from there. It's a guaranteed revenue source for a long time. But what about GPUs? What about NVIDIA's chips? We know that they come out with new chips all of the time. So who's to say if I don't go about building out these AI factories now, what if those chips are almost worthless in 5 years because the technology has gone off so far? And now that AI factory I built is no longer useful because it's out of date from a technology perspective. This is a major question that's coming up. The next part of the risk is that NVIDIA has also said they are willing to back up to 25% to help kind of de risk the case if GPUs are, in fact, not as applicable, let's say, in 5 years. So if you do the math really quick there, that's up to $125 billion that NVIDIA is going to be putting up if that $500 billion total does come to fruition. This is a lot of money for NVIDIA to be throwing out there. And granted, they make a ton of money and have amazing cash flow, but nobody wants to go about losing $125 billion. But ultimately, the real risk here is we are still waiting for clear ROI on AI in general. So this model starts to break if we start to scale AI too much and we start outpacing demand with too much supply. This would start putting in a ton of risk of all of these AI factories getting quickly devalued from there. The other thing that could happen is what if AI gets more efficient? What if it's able to use the compute in a better way so that we don't need as much? So even if demand does not drop, if we get more efficient, the supply could eventually catch up and this would start devaluing everything. So, less demand would lead to less opportunity to build factories because there'd already be too many factories out there, which would then lead to less capital getting spent and ultimately less GPUs needed across the board for NVIDIA. So, what does this ultimately mean for NVIDIA? And I think it's really important to look at the journey that the company has been on. They used to be just a simple graphics card company that were producing GPUs. Those GPUs then became the core function for AI. They have now started producing CPUs and networking, and they also have really unbeatable software. They really have the full ecosystem. And now they want to add on investing infrastructure. So the idea here is they have the full stack. They just need to make sure that the world is able to use their full stack and deploy it so that they can continue to grow as a company. So the takeaway here is to not look at Nvidia trying to get $500 billion here. What NVIDIA wants Wall Street to do is to know that AI is an asset that they can then know how to finance. This is how we start getting more AI factories that produce more AI compute, and it increases the need for their chips well into the future. If all of this pans out, NVIDIA is going to be in an incredible position. You've got Wall Street financing the build out, you have AI companies building the infrastructure, and then ultimately the majority of that infrastructure running on NVIDIA. So when Jensen says an AI revenue is compute, I think he is saying that NVIDIA is no longer just a GPU company. They are helping institutions understand that AI compute is an investable asset class, that they believe global financial institutions should be the ones that fund it. All of this to say, there could be a dramatic amount of institutional funding flowing in and helping the AI build out. So if you learned something today, please like and subscribe to the video so that you don't miss any of my future breakdowns that can help you as a long-term investor. Also, be sure to check out my newsletter and sign up at alextalkstocks.com. Till next time, we'll see you then.